Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. We are back after a short break, and I have some nice interesting movements for you. Most definitely, we're gonna start with oil, which just made new monthly lows, beat the lows from May, and is on the best way to attack the lows from November. I will show you oil even before I will show you the calendar, because almost with every next second the oil is going lower and lower. Not that it's surprising for us, because if you're following Alpari Research and Analysis, you know that we are bearish on oil, and I guess that before my holidays, somewhere here at the end of May, I wrote an article to FX Street where I highlighted the possibility of further downswing. And that's what happened actually. After this article, the price was just going lower and lower and lower. As you can see, this drop is very nice on a daily chart. Stop loss orders were definitely triggered here, and to the November lows, we just not so far away, right? Not so far away are those November lows from the place where the price is now. Okay, what happened? Nothing. It's just the market mechanics. It's just how it works. It's just the market sentiment. We didn't have any significant game changer, any huge information here. It wasn't because of the data. Regarding the fundamentals, what are the top news recently is that, for example, Libya is producing 900,000 barrels a day, which is the biggest amount of oil produced for the last 4 years, I guess. But that's it, and it's definitely not the news that should trigger this movement. It's just how it is. The production of oil is too big, the consumption is too low, and the stop loss orders were also triggered here, so that's just the market mechanics. It's just how it goes. Let me show you the calendar now. As it's the first daily analytical report this week, so let me show you what we should expect this week. It will be this week will be influenced strongly by central banks. We already had meeting minutes from Bank of Australia. We had a speech from Mark Carney. I will tell you what did he say. He's a Bank of England governor. Also, we had a speech from Swiss National Bank chairman. Tomorrow, monetary policy meeting minutes from Bank of Japan, also speech from Mr. Kuroda, non-monetary policy ECB meeting, rate statement, rate decision from Reserve Bank of New Zealand. So as you can see, central banks are influencing trading this week. But most of the important information is gathered on Tuesday, Wednesday, and Thursday. As you can see, on Friday we will have many events, but nothing major. Maybe for the Canada, if you're trading on Canadian dollar, you should watch closely what's gonna happen on Friday, and also pack of data for American dollar, but not so significant. So as you can see, first a few days of this week are focused on central banks all over the world, from New Zealand and Japan to Switzerland, Great Britain, and others. From the fundamental point of view, let me tell you what. Well, we are under the influence of fully hawkish Mr. Dudley from yesterday. He said that if we would stop, it wouldn't be so good that if the Fed stopped with the path of increasing interest rates. So he went full on the full hawkish mode. Another central banker, Mark Carney, had his speech today, and he said that now is not the time to rise interest rates, which negatively influenced, obviously, sterling, British pound. He also highlighted the weakness in the economy and the increased uncertainty in the time of starting the negotiations with European Union, exit talks with European Union. So this was perceived as kind of negative statement, dovish statement on a British pound. So that is why British pound is losing at the moment. We'll have other central bankers talking today. We'll see if they will be also so influential as Mr. Dudley. What we also those central bankers are Fed's Fisher, Rosengren, Kaplan, and yes, from Fed that will be all. Yesterday, all-time highs on DAX, on S&P 500. So important session for traders on stocks. I won't tell you that I'm surprised by that, by new tops on stocks, because the price is in a strong uptrend. But I'm just wondering how long, for how long this optimism will last. Okay, now after a short brief about fundamentals, we can come back to the market. We can come back to the technical situation here. Let me start with oil and S&P 500 and DAX, because those two indexes I prepared for you. So WTI oil is definitely bearish. There's not much we can add here. We are on a very important support. The only hope for sellers is the candle like that, so a hammer candlestick with a small body on top and a long tail on the bottom. But for that, they need to pull the prices much higher. It's probable. It's maybe it's not probable. It's possible, right? It's everything is possible. So we also should take that scenario into the consideration. I wouldn't enter with a short position right now. It was the time for that at the end of May, at the beginning of June. Now I guess that the train left the station already. So as a price action trader, I don't want to open a short position on a support. As a price action trader, the principle is to open a short position on a resistance or after breakout of the support. And now we're currently on the support. So if I had to trade, well, I would tell no, there's no way I have to trade. So watch out be careful with entering short position here, because you are on a very important long-term support. It's not the best place to open short positions. S&P 500, as you can see, huge upswing yesterday. Now we do have a retracement, and for price action traders which believe in this kind of uptrend which we are having now on S&P 500, we are heading to a nice support here. So the first green area here, 2,447 points. It looks like a nice nice area for a long position according to the price price action. DAX also, as we said, made new highs. This support is not so beautiful as on S&P 500 because we had this upswing here on S&P 500. Those are in the same line. On DAX they are not. So I would be more careful with opening position here on this first green area. So now we can come back to the Forex market. That was oil, those were indexes. Let me show you a few pairs from the Forex market. As you can see, this is cable on a daily chart. Cable was doing great here after we broke this resistance. Few good sessions, but now we are losing. But the bullish sentiment is still alive. Why is it still alive? First of all, we are above a trend line. Second thing is that we are above a horizontal support, which is pretty clear here. Resistance, resistance. After the breakout, it became support in 12, 13 of June, and now it's being tested as a support again. Obviously, only the fact that the price is close to the support is not enough to open a long position. What I would wait here for is a price action. So I would love to see a reaction here, a bullish reaction here with a long tail or an outside bar or an angle thing. Also maybe touching the lower line of this wedge formation. Wedge is a trend continuation pattern. So I would say that as long as we are inside of the wedge, above the horizontal support and above this uptrend line, it should be alright. But this decline is pretty sharp, 400 pips. So we have to be careful. Technically, everything looks alright. Not awesome, but still alright. So in terms of the probability, there is bullish scenario is more probable. Next instrument is Euro to Japanese yen, which I personally like. Personally, I think it looks good. Why is that? Upswing, a flag. Flag is a trend continuation pattern. And so the upswing should be continued. Also, we broke the horizontal resistance here and we defended that as a support. So we have a strong combination of those two factors. Bullish technical formation and a bullish defense of the horizontal support. Also, we got nice candlesticks here. Here is an outside bar, bullish outside bar on a daily chart, pretty strong candlestick formation. But today does not look so good because it's a shooting star bouncing off the upper line of the flag, which is not the best thing to see if you're a potential buyer. So maybe it still looks bullish, but in the short term there is no like a trigger, like a short-term buy signal, right? We do have a positive sentiment, but entering now is not the best idea in the world, in my opinion. Euro to American dollar, we broke 1 out of 4 important support. This support is a midterm uptrend line, but we still have 4. Dark blue is the lower line of the channel up formation that we are currently in. We do have a red line, which is a lower line of this correction pattern, which is not yet identified. And we also do have a horizontal support, which was created by lows from the end of May. It was proved here in the middle of June. So we are above all those 3. We broke just 1. It's not yet a sell signal, but the fact that the price is close to monthly lows can be disturbing for buyers. So they need to watch out for a potential breakout. But as long as we stay above supports, the sentiment is positive. And gold. Stronger dollar yesterday caused by Dudley you can see the influence of that here on this candlestick from yesterday. But as you can see, the price with the contact of the uptrend line is trying to create a reversal, especially that we are after 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 not mostly bearish days, but negative. Few of them resulted in an upswing, right? But this upswing was very small, so it's for me still a negative day because the price failed to create a reversal, retracement, correction. So they are trying to defend midterm uptrend line. The next support, if this one will be broken, that won't be a disaster, that won't be catastrophic. Because right below, with the black color, we highlighted long-term support created by a neckline of this head and shoulder formation. So a left shoulder, head, and a right shoulder. As long as we stay above the black line, we can think about ascending triangle here. Ascending triangles are mostly bullish trend continuation pattern. So with the ascending triangle, what we should see is the breakout of the orange resistance, right? That action would be definitely welcomed by the buyers. Chances for that now are limited. Chances for that will increase once we will have retracement candlestick formation, reversal candlestick formation, like for example engulfing, outside bar, hammer, shooting star or something. It looks maybe not promising, but it does not look bad. On an hourly chart we are attacking daily highs, but on a daily chart we are still far from a potential engulfing here. Well, we won't have it because the opening is above the closing price here, but still there is a good place for a reversal. Reversal is kind of happening, but we are waiting for an action to develop. Euro to British pound, as you can see, those negative comments from Mark Carney caused a reaction on almost all of the pairs with British pound. And here we dropped below horizontal support here. We tested that as a resistance and that was kind of negative. But those comments created an upswing here. So we're back above support. It is positive, it is optimistic. So buyers here have now grounds to claim further upswings. Silver. Gold, in my opinion, is behaving a little bit better than silver. What silver is doing is approaching long-term uptrend line. For that kind of uptrend line on gold, for example, we still have a lot of place because it's this one. So you can see that gold is definitely higher than silver. Situation on silver is negative. With this kind of price action, we should see at least a test of this long-term uptrend line. Actually, it's hard to call this uptrend line. It's more like the lower line of the symmetric triangle formation. American dollar to Polish zloty. Exotic pair for you, maybe. For me, not. But it's technical. It's technical. What we are seeing here is that the price stopped exactly here on the lows from the beginning of April. Also, they stopped on the lower line of the flag formation with those blue lines. This creates a chance for an upswing. An upswing can get at least to the upper line of the flag formation. It looks probable, it looks possible. I wouldn't be surprised if we would witness that. But obviously, in the long term, the sentiment is rather negative here. Euro to New Zealand dollar, possibly a very interesting formation will emerge here. Why is that? Because on a daily chart you can see two hammers. Hammer itself is not maybe the strongest formation in the world, but hammer after such a strong drop and hammer on the horizontal support and two hammers in a row, I guess that we can think about that. At least think about opening not a long-term long position based hoping for a bigger reversal, but maybe short-term long position hoping for at least a correction, because this movement here was for 900 pips. So even if we would have like 200 pips correction here, I think that traders should be happy with 200 pips. Am I right? I hope I am right. American dollar to Japanese yen. What we're having here is a symmetric triangle formation with those red lines, and we are exactly in the middle of this formation, waiting for a situation to develop. It's not comfortable for anyone to be in the middle of the sideways trend. That's not the place where the magic happens, it's the place where money are lost. Magic happens on the supports or resistances, not in the middle of the sideways trends, because the chances if the price will go up or down are exactly the same. So there's no reason to bet on that. It's always better to bet on the situation where more odds are in your favor than against. And here it's completely 50-50, even despite the fact that we are below this green resistance here. One thing though, which can be interesting for sellers, is that we do have this horizontal resistance here, and the price is bouncing from it on a daily chart with a shooting star. This may be a little bit negative here, so also a positive for sellers. It can be maybe a good idea. Australian dollar to American dollar, unfortunately there is nothing here what I would like to show you. Australian dollar to Japanese yen. Look at that. Here we had this. Here. Here. Resistance here, but let me change the color. So this is kind of a wedge where they defended the horizontal support, they defended the long-term uptrend line. It does not look bad for long positions here, right? At least as long as we stay above I'm sorry, this horizontal support, the sentiment is, I would say, quasi positive. New Zealand dollar to Japanese yen. Here is a major resistance. I hope you can see it already. I will make it slowly. Because we have left shoulder, head and right shoulder, but this is very long-term formation. Very, very long-term formation, but potentially very lucrative. So, but for this inverse head and shoulder formation, we need to see the price here. And so far, chances for that are rather limited, especially that for to this place we do have 4,400 or 1,000. 400 pips. You have 400 pips to that place. This is a good one. American dollar to Canadian dollar. What's that? That's the lower line of the flag formation. That's the upper line of the flag formation. Let's do it like that. Flag wedge, it's not such a big deal now to name it properly. Support, 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 support. You can see that 23.6 should be important here. But first, to see 23.6, we should see a breakout of the uptrend line. I'm not saying that it will happen, right? But if it will happen, that will be a nice selling opportunity on this instrument, in my opinion. Okay, so all eyes on American dollar to Canadian dollar, because potentially we can see a nice selling opportunity here. So a breakout here, 100, 200 pips. Depends how the situation will develop with the stop loss order. But for example, what we are having here is a kind of a pennant. Obviously, if that's the top, but it's kind of a pennant. So a stop loss, sell stop, for example, here, stop loss 80 pips, 200 pips to get 2 to 1. Still alright. Australian dollar to Swiss franc, no. American dollar to Mexican peso, that's a good one. Support, I hope it's clear. Support, support, support. After the breakout, what supports do are becoming resistances. You all know that. Trend line, just to estimate what the trend is. Trend is obviously negative, so what price action traders do, they can open only short positions here. We patiently wait for the price to get there, and we wait for the price action to show us the direction. If we will see a bearish candlestick, bearish formation here, that will be an invitation for us to go short. Simple as that. And now British pound to Japanese yen, where there was a potential for an upswing. Why is that? Because we had this flag formation here also. Uptrend, but Mark Carney said what he said, and this potential for an upswing is rather lost. We still have an important support ahead of us, which is a white area here. This support is being tested right now. As you can see, inverse head and shoulder formation, left shoulder, head and right shoulder. So this area is the last support for buyers, because it's a combination of this horizontal support and also this dynamic support created by the upper line of the flag. As long as we stay above this orange rectangle, the sentiment stays positive, but it's slowly getting dangerous for traders. That would be it about Forex. Let me check the WTI oil, if we are having any bigger movements here, or they just stopped for a little bit just to take a small break before attacking November lows. It will be hard to force those lows and keep the price lower, below those lows, before the stop, before the pause, before the correction. Without the pause, without the correction, it will be very hard. So I do not believe that the price will fall lower and lower and lower. I do believe in that in the long term, but in the short term, I would expect a rather a small bullish correction here. Okay, thanks very much for attending daily analytical report. I hope you like that. Now we are back. We're gonna have this report every day from Tuesday till Friday. I hope it will help you a lot in your trading. For more information, follow us on our Twitter account and our website alpari.news. Now a short break, and after that we'll have a webinar. I guess it will be about price action. And we're back, so you should watch daily analytical report from now on every day.